Company response is a big question, and obviously we've seen quite varied reactions so far. A lot of companies are still digesting this emerging trend and exactly where it's going. There's a lot of uncertainty. But when we look at very broad peer groups, our analysis shows that global international oil companies have typically had the most reactive approach to changing energy transition or climate change concepts. So they're tending to be the ones who are using an internal carbon price to select their investments. They're advocating for carbon taxes, and they are increasing their R&D in things like renewables and carbon capture, albeit from a pretty low base. Independents and national oil companies, on the other hand, have tended to be less responsive or do less in a lot of these areas, although certainly they are making some R&D investments as well. But when we look across portfolios, we see two broad themes coming out that impact these peer groups. So the first is we have a shift towards gas investment, and that's happening regardless if you're an IOC or an independent or an NOC, although the motivations tend to be quite different. For many IOCs and independents, this is increasingly driven by climate-related concerns. For NOCs, it still tends to be much more about domestic energy supply, which is their primary focus. The other big shift we see in portfolios is a continued move towards shorter cycle unconventional barrels. This is really particularly by independents, a bit less for the global IOCs, but still there, and much less so for the national oil companies, coming in part from the fact this trend is still focused on North America. Now, quite ironically, the focus on shorter cycle unconventional barrels doesn't really align with the climate change initiatives and concerns, given the higher emission footprint generally. It is much more about maximizing shorter projects to get faster returns to reduce risk. But both of these trends are really pulling a lot of investment in the sector into these two areas, gas and short cycle unconventionals. And that means a lot of pressure on host governments. We're coming into a very oversupplied gas market, and a lot of pressure will be coming to compete for upstream investment, both in that market of an oversupplied gas market and as this climate change dialogue increases. So really, company portfolios are already shifting. Government response is something that is in the earlier stages of emerging.